De-risking the US dollar risk. Hi, everyone, and welcome to another week of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, we welcome back Alex, who we've both been away last week on a little bit of a break, but it's great to have her back on to really look at this US dollar situation because a lot's really happened over the last, well, not just the last week, the last period of time, but last week in particular, we've really started to see some weakness in the US dollar. So it's good to have Alex back on to talk about that. How are you going down there, Alex?
I am going well again, thank you. How about yourself?
Excellent. Yeah, I'm going well. That little week off is very refreshing. So it's good to get back into the markets, though. It feels like a lot's happened over that time. Well, the article today, you're talking about the US dollar, and this is something we've been discussing. I know we've talked about this multiple times, but it keeps coming up in conversations that I'm having with friends and other people who are sort of interested in the investment space and the macroeconomic space. We're constantly consumed and obsessed with what's going to happen next with the US dollar. So we've seen it back down near the recent lows because it sort of made those lows earlier in the year and then had a bit of a bounce back up, but pulled right back down, right at that bottom. And there's some discussion about whether that's a double bottom and it heads up from here or whether it's going to break lower. So we'll get into all of that in this discussion today. But what do you sort of see as the risks overall for the US dollar here? Can you maybe give us a bit of background of what you were talking about in the article today?
So, the US dollar has been the world's reserve currency since World War II. It was backed by gold initially, and then, during the last inflation wars, the petrodollar was created. So that kept it relevant, it kept it the reserve currency. And, the US has very deep financial systems. It allows people to trade in it. And the US over since World War II has been seen as the most stable economy in the world.
Mm-hmm.
But you can't look at the US anymore and think it's as stable as it was. You've got these political issues constantly arising. You've got Trump being impeached at the moment, like on trial. Like there's things going on that the political stability is questionable. You've got a debt ceiling now that's been breached, and rather than dealing with it, you've got Congress talking about it and Treasury just finding new tricks up its sleeve just to literally avoid dealing with it.
Well, and that's a really interesting one because we were just talking before this, and I thought the last thing I read that they were nearly out of the money in that fund that they had, the last sort of pulling money out of nowhere. And then you're saying they were talking they could push it back potentially to next year.
That is what I've read, whether or not that's right or wrong. But, we had this June 23 deadline, which is fast approaching.
And they look nowhere near ready to settle on that.
No. And so now they're sort of saying, oh, maybe if we do something here and something there. So, they're creating some pretty fancy tricks now just to keep it going. But now then, you've got those instabilities just in America now, but you've now got all the Federal Reserves. Like on Friday, we had Waller just stand up and say, oh, we're going to keep raising interest rates. So you had retail sales, pretty poor data on Friday. There was nothing to support the US dollar, but you've had I think about a 0.8% jump in the US dollar on Friday, just because one of the Fed officials says we're going to keep going. So it's not Powell anymore. It's all the members of the Federal Reserve, just left, right, middle, they're all just saying whatever they want to say, and the markets are moving. The volatility is insane. And so if you're going to have a reserve currency, currencies move, everyone knows that. But to put so much volatility into a reserve currency creates a huge amount of risk for countries, for companies. It's having that as a middle currency now is creating risk that countries and companies want to get away from.
And so we've seen people, particularly political leaders, and it's actually tends to be your finance ministers and people of that sort of level around the world in some of these countries come out and actually directly talk to this. And we haven't seen that really happen before. It's always sort of been the conversation in the back of people's minds about, well, why do we need to rely on the US dollar? But it's really come forward recently, and I know you highlighted a few in the news today. But what really started this recent de-dollarization focus? Because this has been an on again and off again argument for decades. Really, we've had constantly this thought of, well, the US dollar is not going to remain the global reserve currency forever. And then ultimately it seems to end up stronger than it was prior to that conversation. Everyone, says, we told you it's still going to be there. It's always going to be
Yeah.
there. But is it a bit different this time? Because I feel that it's been, this conversation hasn't just been people talking in, the back of Twitter or on the internet. It's been actual, leaders of countries having this conversation.
Yeah, I mean, probably we spoke about this at the beginning of the year, and we said this is going to be the year that de-dollarization is the term.
Mhm.
So, it was pretty recognizable that this was going to happen. But what's really started to happen is you've got countries now that have just gotten out of it. So you've got Russia dealing with India, you've got
Yeah.
the Petro One, but probably the most recent sort of this talk started happening about a month ago, and it was probably the Brazilian president that had started talking about getting away from the dollar. And then that sort of escalated. And what was really interesting this week is everyone's talking about Macron saying no more Taiwan, if the US goes to war with Taiwan, we're not going to get involved. He also, during that discussion, talked about de-dollarization.
Mm.
He is a very stable European leader, probably the leading one in Europe at the moment. He is saying, de-dollarization, and he's questioning, like all these other leaders, why is the US currency in the middle of all their trades?
Yep.
Because, with the weaponization of the US dollar and what Russia's been able to do and what China's been doing and Saudi Arabia's been doing, everyone's learnt to fish. Everyone now knows that they don't have to have the US dollar in the middle. So everyone's now starting to question it. And it's still there. America is still a huge economy. People want to deal with the US. They will trade in US dollars, but they don't have to do it. Brazil does not need to trade with China in US dollars. Russia
Yes.
does not need to trade with India in US dollars. There's other ways of doing this, and these countries have learned.
And it's more than that too, in my mind, because the technology has changed, right? And I know it's highly controversial, and there's a lot of discussion going on about things like central bank digital currencies, and the risks associated with that. But even just taking a step back from the full sort of cryptoization of it, or doing it that way, you've just got better payment systems set up across countries that they can interact directly with other countries and central banks, that it doesn't necessarily need to go through the archaic system. So
Yeah.
that's changed.
Yeah, so
And
they got rid of SWIFT in Russia, right? They wouldn't let
yeah,
them use it. And within 6 months, they've got a different one in China that they're able to use. So it's
that will be on the back of the technology and the knowledge and the know-how, and that's all improved over time. So it is probably a bit different to where we've been in the past in terms of capacity
yeah.
to actually make some of these changes as well.
So yeah, and what has now become really interesting is, in particular, look at what India is saying. India is now saying we want to be a reserve currency.
Yep.
So they are saying that there's going to be a basket of reserve currencies. They've opened up their dollar to 18 other countries now to start trading, with their currency.
Mhm.
So they're recognizing that the US dollar doesn't need to be the only reserve currency. Its relevance is still there. It is not going anywhere. But you've got Brazil, India, Russia, South Africa, all the BRICS now talking about a BRIC bank. So, they're proposing different currencies.
And I'd like to clarify something here too, because I think sometimes when we talk about the dollar and needing dollar reserves as a reserve currency, that central banks hold these, we're not necessarily saying that other central banks or individuals or companies won't hold US dollar debt. Like, there's something about US dollar debt that it has that depth and security. That there's a lot of reasons why you would hold that as an asset for collateral in the system. But that doesn't necessarily mean, you might need US dollars to buy that debt, and you might be paid US dollars as the sort of income from that debt. but it doesn't mean that you need to be holding a big pile of US dollars on your balance sheet to facilitate that.
No, why? I mean, if Australia is dealing with China, why wouldn't we hold yuan and Australian dollars? And if we're dealing with Brazil, let's hold, Brazilian money. Like, why is it just US dollars?
Yeah.
There is no reason for this anymore. And and we're going into a recession. We know we're going into a recession. All the numbers, the yield curves, everything's indicating that we are heading this way. And we are not seeing the same rise in the US dollar that we would traditionally see right now.
And that's a really good point I'd like to dig into as well. So what are the implications from here? Because there is an argument, and people are saying, it's a double bottom that's, it'll bounce back higher, but that's not really compelling to me looking at the chart. So what are the implications if it goes the other way and it does break down lower from here? What does that sort of mean? Because as you just pointed out, traditionally in this environment, we would expect the US dollar to be rising.
Yeah, and you and I were talking about it before. This double bottom was hit on jawboning. Now, every time you see jawboning from anyone, from Europe, from Australia, from the US, there's usually a reversal because people, hear the news, trade the news, and then go, actually, retail sales were terrible on Friday. So to call right now a double bottom seems a little bit premature. So we'll see how this week goes. But if, the US dollar does keep breaking down, well, commodities should go up. Gold should go up. It's not going to be the reserve currency of the world, gold. If it is, that'll be fantastic because then we're going to hit around $50,000 an ounce. But that's not what anyone is saying. What people are saying is that what reserve currency? Why does it have to be a reserve currency? Why is there a middle currency? Why can't you trade in gold? Why can't you trade in copper? Why can't you trade in rupees? Like, you don't to have to move. So if I was to buy gold from China at the moment, I have to buy US dollars. I buy the gold in US currency. I buy US dollars. I send the US currency over to China. China then turns it back into their currency. So there's losses all the way through. So why can't I just trade now without that middle currency? There are two trades that I don't need anymore.
And that's the question, the right question that people are asking. And it's not just people now, it's governments and heads of governments.
And it's Europe. It was the BRICS. It was just Russia, China. It's Europe now. And this, what seems to be a trickle is suddenly a big snowball coming to the world market. And who knows what it's going to look like. No one's professing to know where this goes. But, by not trading, by not having the middleman in the middle, which has become riskier and riskier, mainly because of the volatility, to be honest, and just the inability to control what's going on with jawboning. Now, why not take that risk out?
It makes a lot of sense, and I think, well, thank you firstly for discussing all that. I think this is going to be a controversial topic. I think we're going to have some comments that disagree, and because I know that because I've been having the same conversations with other people who don't agree with that. But regardless of whether we're right or wrong, it's something we need to be thinking about because other very important people thinking about it. And if we're caught on the wrong side of it, this is one of those areas where you probably you can have an opinion, but ultimately you need to follow what happens because it can burn you quite significantly if you really stick to your guns and sort of your rhetoric around, no, this is just the way it is because it's the way it's always been, or
everything's the way it is and everything the way it's been until it breaks and it's different. Right. And this, this has been this way since World War II, but it's not always going to be this way. And that is apparent. It just doesn't, nothing lasts forever. And this, if it's this one or if it's, the next one, it's breaking.
Yeah. And we're certainly closer to the end of the era than the beginning.
Yeah. And you know, like you talk about with crypto, and everyone talks about with technology breaks systems. Technology changes systems to make them more efficient. Everyone needs to look at how inefficient 2 transactions in the middle of every trade in the world right now creates inefficiencies, and ask yourself, is technology going to change this, or is technology just going to leave it alone?
And yeah, the answer to that one to me seems pretty clear. So we'll see what people say in the comments. So thanks again, Alex. Really appreciate that.
Oh, thanks for having me again. I get a bit
Thanks.
passionate about these things.
You do, and it's good because yeah, I'm on the same page with a lot of that. So I really enjoyed that conversation. Thanks everyone for watching. Remember, reach out with questions or comments on social platforms. We do read those, and they do sort of factor into what we say and where we go next on our topics. So keep those coming in. That's us for today. We'll probably be back later in the week, hopefully with more discussion of what's going on in the markets generally, gold, silver, and all things macro. So until then, stay safe in the markets, everyone, and we'll talk to you later.